Hello everyone, and welcome to another weekly video report. Now, today we're going to be talking about macro, we're going to be talking about stocks and markets, and of course, we're going to be talking a little bit about Bitcoin. Now, the main news today comes, of course, from the hands of Janet Yellen and Jerome Powell and Ben Bernanke, all of which have had some interesting words to say in recent days. Now, we had Janet Yellen on a CNN interview this morning talk about her outlook for the financial system and that June X date, the date where the federal government is going to be running out of money. Now, I did talk a little bit about that in the newsletter, addressing how there was some idea that that this June date could actually be pushed back to August, even September. So she actually came out today and emphasized that this is a hard date. I could talk a little bit about that maybe on the next newsletter. And she did talk a little bit about the financial system and how she expects more mergers to happen. Okay, and following that, we have, of course, seen the regional banks, the KRE, which I did advise buying a while back. And we did get a nice rally from there. But today we did see the index fall down to about 38.56. Now rebounding a little bit into that 39. So actually, I think it was down over 3%, now rebounding a little bit there, okay? And let's go ahead and talk about that KRE chart now. For those of you subscribed to the service, you know that I did point out quite a timely manner that we were looking at a good strong divergence, so you can see here on the daily chart that divergence on the KRE, this price going down while the RSI is going up. So we're seeing signs of exhaustion in the selling, and I did advise buying the KRE. I believe it was around 36, so somewhere around here. I did talk about buying that. So far, that trade has worked out quite well. If we look at the daily chart, we are heading basically into that 50-day moving average. And in terms of the Elliott wave structure, although it's not quite clear, let's look at the 4-hour, make it a little bit easier. We could identify an initial 1-2 here and a 3-4-5, which would help us finish that impulse. Now, if we wanted to get a good target for that based on the fib levels, we'd be looking at a wave 3 ending around here at the 44 level. And maybe rallying to 47 before a more substantial maybe pullback, which could take us back to this level. Now, of course, this is a key level of resistance this band right here where we traded for so long. So this, I would say, is the first level of resistance. And I would say I'd expect us to probably hover around this this 42, 44 area for a while. So initially, I think if we can pump up to about 44, 45, that could be a good place to take profits. And then I'd expect a little bit of a pullback in 4, and then maybe marginally high in wave 5. But as we can see, we could see basically quite a lot of a sideways movement here as we struggle to break out of this range. And of course, that is on the daily chart. We have the 50-day moving average at around 42 coming in there, so we'll have to deal with that. Overall, though, still quite bullish on this trade, which has worked out quite well. And like I said yesterday, worth holding for the long term as well. I reckon there's no particular need to sell out early. I think we can hold this, and eventually, I would say, within the next year or so, I would expect us to head back into these levels at some point. Okay, so like I said, not a bad idea to hold on to that. Okay. And in terms of that, in line basically with my overall bullish outlook, which I outlined also here, looking at all those bullish charts, talking about why money supply is leading inflation down, looking at the technical chart, and of course, basically comparing the recent rate pause to that 2006 rate pause, where we got that good rally in 2006, even though for a lot of people, I think it was already clear that there was something wrong perhaps with the market. Despite that, the old saying that the market can stay irrational longer than you can stay solvent applies. And to an extent, not that the market is irrational, because I think a pause does basically give the market a good excuse to rally. Yeah, like the market can say, okay, we have monetary tightening coming to an end, and like I said, the economy for the moment holding up quite well. And that is kind of a little bit about what's been talked about today. Of course, we had Jerome Powell talking about monetary policy, and basically, same stuff as you would expect, really, talking about how we've had the labor market and the economy being more resilient than expected, and of course how that might play out into achieving that Fed's 2% target. Now, the idea that I have right now basically is that we are going to see disinflation, but I do hold a longer term view that inflation is going to persist or even come back eventually, right? But so to that extent, I do agree with a lot of people who are saying, well, you can't have meaningful disinflation without an economic crisis, and I believe that could come, within the next 2 years or maybe even less. But before that, I do believe we are entering that kind of Goldilocks period where we are getting the disinflation and the numbers are holding up quite well. Okay. And anyway, so not really much to add here with what Jerome Powell said. Kind of talking about this idea, as always, the Fed will be a data dependent, but kind of hinting to an extent that the idea that rates should be the Fed should be done hiking at this point. And that is what is reflected here. If we look at the target rate probabilities, now close to about 80% of market participants expecting that Fed pause for the next meeting on the 14th of June. Okay. But again, nonetheless, I will point out yet again this chart, this all-important chart that I've talked about before, where we have those spikes in inflation during that 1970s period, and I expect kind of a similar dynamic possibly to play out, in the next decade. Okay, but nonetheless, like I said, point out here with these arrows very simply, when you get that, that inflation heading down, you usually see strong recoveries in markets. Yeah, so this is what I'm expecting more immediately, but of course we have to be careful because I do expect us to come down at some point. I guess, obviously, I've said this before, a recession will occur at some point. You can always say that, and you will always be right. The point is, when. And obviously, so far we've been right not to short the market like a lot of people, looking for those new all-time lows, and the market is just denying that. Yeah, because we can see here, just looking at the SPX, obviously we were talking about this triangle here, and though I did say that we could head a little bit lower and I would be buying that dip, I also said I was positioned for the upside, and we did indeed get that breakout to the upside. Yeah, so for the time being, SPX, of course, challenging that 4,200 level of resistance. It sort of broke above it, I think. If we look at the smaller time frame, we did sort of just about break above that kind of B wave high we have here. Of course, right now being rejected, but ultimately, I think pretty significant, and really giving the bulls some strong arguments here that we are heading further up. Now, the target for this, if we look at the main structure here, of course, we'd be looking at this being our wave 1, and measuring from around here, we'd get a target for our wave 3 of, somewhere we'd expect, again, anywhere between 1 and 1.618 possible. So I would say easily around 4,400 maybe for that wave 3. Sorry, exactly. So the wave 3 up here, the larger wave 3 that we're measuring, would take us to about here. Yeah, maybe 40, even 4,900, but could be a bit lower. That depends on how you measure it. Yeah, we could also look at the smaller degree structure. Again, these are all indicative. You have to be able to look at these targets with a bit of a with a bit of a skepticism, you know, but similarly, you know, if we then look at the complete 5-wave structure we have here, it does take us to a very similar range, which is that 4,900. Yeah, maybe even just about, actually just about surpassing those previous all-time highs. Okay. And, you know, it's a matter of time at this point. I've seen a lot of people, you know, if you look at the European markets, a lot of them are already reaching those all-time highs. Yeah, we have, for example, here the DAX. We can see a comparison. The DAX actually has already broken above its previous high. And again, I'd be very surprised if we didn't see the SPX go the same way. Now, obviously, the Nasdaq has been outperforming the SPX quite noticeably, yeah, and that is to be expected. Again, I do believe we are seeing more of a risk-on environment, right? So we have seen, in fact, the Dow even down on many of these days, followed by, and then the SPX kind of going up even more slowly, and the Nasdaq being the big outperformer in the last few days. Now, question is, we are at this point getting a little bit overbought. Obviously, we can see that on the 4-hour chart. We might also see that on the 1-day chart. Of course, quite good in terms of momentum that we have managed to, like, with the get the RSI to break above that previous level we had here. Yeah, so that indicating that momentum is strong. Yeah, there's volume and there's strength behind this movement, but of course at some point you have to wonder when we're going to get a bit of a pullback. Now, I could think about a more immediate pullback maybe happening and retesting this trend line level. Yeah, of course this was resistance before, now it becomes support. But more on the larger time frame, you know, even though you could consider shaving a bit off now, I mean yesterday especially, obviously down today, on the more immediate time frame, I'd expect us, so on the more medium term, I'd expect us to keep rallying at least into this level that I have here. Kind of, that's getting us close to the 1.618 or 1.272, and you know, closer to that trend line we have here, which is, let's see, actually a bit of it, getting a bit more straight. Again, this kind of depends on, maybe we'll use the 4-hour chart to make it a little bit more clear. So if we look, for example, at that trend line coming in from up here, too many lines here. Of course, we had that bull flag forming here, yeah, bull flag structure here, bull flag structure here. So again, probably get something similar where we rally into this wave 3, get a little bit of that bull flag structure, basically that kind of short retracement, that kind of sorry guys for moving this around so much, just trying to get this to make a bit more sense. Yeah, basically looking at that, I would say 14,500 as maybe a big major level to come in next year, important fib level, and kind of where we would get that that trend line coming in, yeah, for that kind of channel that we are forming at this point. Trend line here. So yeah, to that extent, we have seen the Nasdaq outperforming, and I do expect the Nasdaq to keep outperforming again. This is kind of the more risk-on environment. Now, in terms of that, what we haven't seen outperform so much is, of course, the cryptos, right? We have Bitcoin kind of basically hovering around same levels for some time now. I did want to point out before we get into the technical analysis on the fundamental side, quite bullish news that we got a couple of days ago with Tether saying that it would invest 50% of its net profits into Bitcoin. Okay, so quite interesting there. That would amount to roughly 222 million based on the last attestation report, which the company generates 1.48 billion of net profit. Okay, nothing huge, but again, somewhat of an interesting and quite bullish news for Bitcoin. Now, here is the chart for Bitcoin, and we are pretty much stuck in this range over here. We can see with Bitcoin kind of going up and down here, not quite wanting to head further down. Now, I did point out that we were kind of getting a bit of exhaustion to the downside here, not quite managing to make lower lows on the RSI in this move here, but the structure does look a bit corrective. I would like to see maybe us hit that lower low, maybe challenge that kind of that $25,300 level, which is the 50% retracement of this wave one here. So that would definitely, if we got to challenge that area, we may feel a bit more comfortable about this coming rally. For now, I mean, the lines are pretty much set here. We are range bound in this area right here, looking for some kind of a signal, yeah. And again, Bitcoin could be range bound for a while. Ultimately, though, I do expect that that to break out. Now, I will reiterate once again that to the extent that we are moving on to that risk-on environment, I also think we're going to see the we might see some of the more I did post a couple of weeks ago, I said long beta, right? Because the more volatile assets you could see outperform. Now, this is the Ether Bitcoin chart, of course, which shows how Ether has been slowly outperforming Bitcoin. And on the grander scheme of things, we're basically getting ready, I believe, for a big breakout from here, which would send Ethereum. I mean, when this line goes up, obviously it means that Ethereum is outperforming, and that is usually the signal of Altseason, right? Where altcoins begin to outperform. And already I'm seeing, pretty much a lot of, not a lot of resilience, but notable resilience on the altcoins, yeah. Where, even though, I mean, it's actually right now, the structure, for example, in Cardano looks a lot more bullish than in Bitcoin. This is actually slowly grinding up, at least, with that kind of very clear low in place there. And of course, if we look at some of the others, I pointed out the other day, Lido Finance, big bump here in the price. Yeah, this is something that I talk about in the marketplace. We did talk about those altcoins here in our altcoins opportunities, how all of those hit our target levels, and how we've seen some good reactions. Yeah, this chart will be so this chart in Lido Finance will be a bit more indicative. You can see there that was my target area, and basically how we've bounced back quite impulsively from there. Of course, got a bit overboard there, a little bit of a retracement, but again, it's looking quite bullish. Now, finally, what I wanted to talk about as well is the idea of the Bitcoin price moving forward in terms of the larger structure, right? Now, I have talked a lot about how I like to make comparisons, and I was talking about that this comparison, right? The lines everywhere. Okay, that's the wave one. Right, that the idea of that Bitcoin halving cycle, right? So if we look at the chart, right, maybe look at the weekly chart. So we had the Bitcoin halving here back in 2020, right? And the way it worked is we got that we got a pretty significant impulse. This is not log, that's why it looks so weird. Okay. We got that pretty significant impulsive move from 3,000, But then because of the COVID crash, we've got a big retracement, something that, you know, could be expected in a wave 2. Yes, so down about 72%, as we can see here, after rallying about 346%. Now, I've been talking about how we could be expecting a similar move here, and ultimately Bitcoin could reach somewhere on this structure that we have outlined here, which is the main one I'm tracking. We could see Bitcoin maybe top around 40, maybe even close to 50,000 before we get a more substantial pullback in a wave 2. Again, waves 2 can retrace, 61, maybe even more, but they can also be shallow, and this is something that we have to take into account. And this is something that been seeing some people point out, which is that if we go, this chart doesn't go back far enough. So if we look at Bitcoin, let's see on this one, all-time history index. Some people I've seen talk about how maybe this is not so much like here, right, where we got that 1-2, but in fact we could be looking at maybe more of a steady grind up. Yeah, something like we saw, for example, in in 2016, right, where we just got more like very short just retracements and just more of a grind, more of a steady grind up. Yeah, and it's also something that we've seen, for example, here in 2012 as well, when we bought some here, big impulse, and yeah, somewhat of a retracement. Yeah, obviously I still believe, right, if you look at the Bitcoin cycle, you normally get that impulse, that distribution, bear market, distribution, and impulse, right? Kind of 3 phases. But of course, the question is, how far back can we retrace? And I just wanted to open you guys up to the possibility that we might not retrace that much, and we might, again, we might top. We might say, could this cycle be different, right? So far, we're following similar structures to the previous halving cycles, right? I mean, this is no news to most people, but just in case, just to review, right? That's the stock to flow model, and this is kind of what I'm talking about, right? Look at the heat map here, showing you the days until the next halving. So of course, when we change into the red, this is the halving dates here, right? And we can see basically that impulse and more of the bear market distribution, impulse, bear market distribution, impulse, bear market distribution, and impulse, right? But again, yeah, basically what I'm saying is, instead of looking more like this, because we did get that COVID-19 crisis, we could just grind up, and also the possibility that we could finish most of the impulse maybe even before the halving, right? So this is something I have to take into account, especially when everyone is trying to preempt this, and models do break eventually. So I'm just saying we have to be open to things being different. Okay, to that extent, we have to be open to maybe holding on. I would say, holding on to that Bitcoin maybe a bit longer. Yeah, this is not again, once we start going, this is not a train you want to get off. And also being open to the possibility that maybe we could top sooner than we think. Yeah, because if we look at the macro timeline, I think that, like I said before, we do have some excuse to rally in the more immediate term with the pause, but as soon as that economic data starts to deteriorate a bit more, we could see a big crash. Kind of, again, I'm going back to that 2006, 2008 comparison. I do think that something similar could be in the cards, and that's something that we have to be wary of. Yeah, so just saying that ultimately liquidity is an important driver of the market. And actually, that reminds me of perhaps final point, which is I also talked about a trade idea recently, which was going long China, something that I'm still standing by. I recently talked about Alibaba. It's a company that I'm happy long. And this is QFIN, which is actually a trade that I talked about a while back. And we have actually now hit my target for that with basically, I had a buy here at 15.7. I said we are now at well below that, actually, at about 14.27. I did say that basically, okay, so I said 15.7, that's above that 50% retracement. That would be target one. And I did say that the way I would play this is basically open half a position here and maybe open half a position here. And this is basically my lower limit for going long here. So again, I'm pointing this out now. If you haven't, if you already bought a bit higher, obviously you're a bit underwater now. Good time to double down. If you haven't bought, this, I believe, is a very good place for QFIN. Yeah, again, I think China is set to outperform again. Well, and this stock in particular, this is a high beta stock, like I said. So this will give you kind of slightly more volatility in terms of upside and downside. And I do see China as possibly outperforming going forward because of a lot of the issues that I've also talked about. If we look at what we saw at the beginning of the year with China reducing its key interbank lending rates and opening the door to that fiscal stimulus. And that is actually something that, following the recent economic news coming out of China, those lower retail sales, we've opened the door to that again. And again, China has a lot of leeway to ease monetary policy. That's something that they can do, and I believe will do, which is why I think, if you look at how we rallied over here, this rally was in part, I would say, towards the end of the year. This is when we got that push in liquidity, right? And this, more or less, going into January, people were saying, oh, why is everything rallying so much? Oh, we've got a lot of global liquidity. We've got China easy. We've got the Bank of Japan. I know I have a chart somewhere of this, how we saw that global liquidity rising, and now we've got the Fed pausing and possibly China going back into easing, Japan not scrapping the yield curve control. So again, liquidity coming in. And speaking of which, Japan, of course, one of the indexes that has been performing very well, breaking above its previous highs and basically making almost new all-time highs. Yeah, we see this is that kind of pre-bubble high, and basically we're approaching that. And this is something that's been pointed out by Buffett. Also a good time to buy Japanese stocks, even though they are a bit perhaps overboard. Japan, I would still hold maybe for the long term. Europe is another case. European stocks have done very well, and I think that could maybe be over. Anyway, I think maybe we'll talk about that on the next video. As always, guys, I hope you enjoy this content. Stay tuned for more, and don't forget to let me know in the comments what you like, what you didn't like, and yep, see you on Monday. Have a good weekend.